Hello out there, and welcome to the Camp Financial stock market update for July 13th. Interesting day in the market for sure. Before I get into the market as a whole, though, I want to talk about a trade that I made yesterday. So I was looking at Fitbit. I've been looking at Fitbit for quite some time. And I'm going to pull that up while I'm talking about it here. So yesterday I decided to go ahead and take a shot on Fitbit and bought 200 shares. So what I'm looking at here is, so Fitbit is bounced, it's hit a double bottom a couple times. It's kind of looks like, I would say the price for the double bottoms around 30.20, 30.25, something like that. Obviously it's been down a little lower in the 11 range, but or in the high 11 range, or around 12, but it looks like just under $13 a share. It's kind of bounced a few times. It's hit a double bottom there. So I was looking at that, and then the other big thing is that it just crossed its 20-day moving average. So right, I am completely honest on here. Some stocks I buy because I go back and I read their SEC filings. I listen to their earnings calls. For example, right now I'm looking at a company, Tower. They're car parts. They're in the car parts industry, and I have been pulling all of their old SEC filings, their 10Ks, their 10Qs, and looking at all of that information, trying to get a solid idea of their price to earnings, based on where can they go from here, that sort of thing. So like I said, I invest both ways. I try to merge technicals and fundamentals at times to, if the stock tells me technically it's really good and fundamentally it's really good, that's probably one that I'm going to definitely take a shot at. Trade I'm going to take a shot at to let it run and see, just how far it's going to go. So, all right, with that said, let's go back to Fitbit here. So the technicals, they had crossed the 20-day, and actually they had bumped up against the 50-day. The day before, they had actually crossed over the 50-day. When the market opened back up yesterday, it crossed back down below. And then I believe it's actually back above today. I'm looking at the chart. I'm looking at it's probably not a great one. Let me go pull up the chart in Yahoo Finance. I love their charts, and actually their whole new finance page I think is going to be much better. I think it's you have to do a little more work to find the information, I guess, that you're looking for on a specific stock. They've got everything's kind of broken out in tabs. But me personally, I think I like the feel of it better. I think it's a little cleaner. So, all right, so we got now we got the 1-day chart up. There's the 1 year. So the 1 year chart, so it's bumped just below the 50-day again, and I feel like if it can break through that 50-day, we're probably going to have a pretty good run. Last time it broke through the 50-day was what's the date on that here? Let's see if I can find that. So the last time it broke the 50-day was right at the end of March. March 31st is when it broke through. It broke through at $15.15 a share, and it ran right up to $18.37 a share before pulling back. So then if you got out when it crossed maybe the 20-day on the way back down, you got out around $17, so you made a quick 10%. And that's kind of what I'm looking at here with my trade in Fitbit, is I'd like to be able to make a quick 10%. and then move on. Now, so the other thing that I did though is, why not look? So I know how much I'm willing to risk. I got in at $13.70 a share, and I know that I'm willing to risk $1.70 a share on the 200 shares. So I'd prefer actually to get out at around $12.30, $12.40. But even getting out at $12 is fine. You know, it's going to be about it would be about a 15% loss if I get stuck on it at 12 bucks a share if I get stopped out down there. So to protect my downside, what I've done is I sold August calls at the $12 strike price against my long on the stock itself. So what I've done is I give myself some income of, you know, I sold it at $40 or 40 cents. So $80 minus the transaction cost of about 10. So I've already made like 68 bucks off the trade. The stock's down a little bit since I bought in. Yeah, definitely. So I got in at $13.70. It's down 14 cents on 200 shares. So that's down 28 bucks. So, you know, right now it's still a net positive of $48. Like I said, I can get out at 12, but by selling those options, that makes my price, you know, if I get stuck at 12 and I'm out at 12.40 and I'm down my 10% and I move on. If the stock runs up, the options expire worthless. And oh no, that's what I did. I'm sorry, I sold a $17 call. Yeah, I knew something sounded wrong. I sold a $17 call. So if the stock runs up, if it hits $17 a share, I'm out. But if the stock goes down, I can sell out around 12.40, cover my calls, and or buy back the calls, and then move on with the loss. So I don't know. Like I said, that's just a technical idea on that one. I liked Fitbit when it hit that second bottom, and it's kind of stabilized there and bounced up and down. So just wanted to lay out that trade for you guys that I did yesterday. Like I said, 200 shares. I'm long 200 shares of Fitbit with and I sold two $17 calls to give myself basically a $13.30 entrance into the stock. So with that, now let's take a look at the Dow. Dow yesterday, interesting day. You know, started off like it was going to take off again. Then the oils drug everything down, but the stocks did rally by the end of the day and still end up for the session. S&P 500, same kind of thing. Looked like it was going to take off the front. Then it ran down. It was down about 6 points. Not really that much. You know, about 0.3 of a point. Ended up coming back and finished exactly flat. Might as well call it. Yesterday the utilities took back some of the gains that they lost the day before. Basic material stocks gave back the gains that they had taken the day before. And there's some bright green here in the service sector, and let me take a look, see what that is real quick. So let me see, that's the railroads, Union Pacific's and CSX, all of them up between 1.3 and 4.4%. So a good day in the rails yesterday. Now here we go. So let's get the S&P up. We'll start in the S&P 500. Top top and bottom performers. If I can get to pull up. So we'll start at the bottom. Chesapeake Energy, Diamond Offshore, Host Hotels and Resorts, Hess, and Kohl's. Again, not much surprise on the oil and gas, right? I mean, they had run up the day before. Oil took a big hit yesterday, so they all followed suit. Now, so 3 of those were oil and gas. Host Hotels and Resorts is a hotel motel REIT, and I'm just wondering if they were downgraded yesterday by JP Morgan, so that would have impacted, definitely would have impacted their day. Although they did announce the election and their change in their director and principal officers. So we'll see whether or not people think that's a positive going forward. So let's take a look at Kohl's. Kohl's yesterday. I don't see any big news on Kohl's yesterday. My guess is probably there were still some aftermaths from the day before, from the Amazon Prime Day, and people buying a lot of product on Amazon. So it might just be kind of a counter trade, looking at, oh, okay, well, Amazon's going up, maybe we sell off some of the department stores that they compete with. Top performers, like I said, railroads, 3 of the top 9. CSX, a top performer in the S&P 500 yesterday. Humana, the healthcare plan. Level 3 Communications, the Mosaic Company, and CF Industries Holdings. The last 2 are both agricultural chemical companies. And level 3 is a diversified communication company. So interesting. Those top 5 stocks were up 3.42 to 4.4% in total. I'm going to take a look at the railroads. The railroads kind of quietly been on a run since probably since March. I mean, they did pull back a little bit, but really since March. If you look at CSX, actually you can go clear back to February. CSX was down to $22 a share. It's now trading at $28. So it's made a quick, almost 30% gain. Trying to get this thing to scroll here, see what's going on. What drove them yesterday? My guess is we probably had some analyst upgrades. Yeah, there we go. Stock rise after beating earnings. So CSX earnings were out yesterday. I have to go back and take a look at those, or at least listen to the earnings call. But so they beat on earnings, and when one railroad beats on earnings, odds are pretty good the others are going to as well. So that'd be why the other stocks followed suit. Norfolk Southern and Union Pacific. Now let's pull up the Dow real quick. Try and keep just real fast now, because I want to try to keep these to 15 minutes here. And I went a little long on the personal trade early, but okay. Worst performers in the Dow yesterday were Home Depot, Apple, Boeing, Disney, and Caterpillar. And that was from minus 0.14% to minus 0.95%. It's like 12 stocks in the Dow were down yesterday, so 18 advancers, 12 declines. Top 5 performers: United Healthcare, Verizon, Goldman Sachs, IBM, and United Technologies Corporation. IBM's been on quite a tear recently, but so these stocks yesterday were up between 0.56 and 1.16%. As it looks like we're going to continue to see flight to U.S. dollar denominated stocks, and especially those with a dividend, as the global market's still trying to figure out, what it is exactly that they're gonna, how they're gonna make a move, with all of them having negative interest rate yields right now. So that's it for today, guys. Take care. Like I said, in every episode, if you have any questions, send me an email, chrism@campfinancial.net. If you got a stock that you want me to take a look at, that you think that you're looking at, you think this might be a good trade, send that to me as well. I'd like to be able to take questions and help people understand at least my thoughts on what a certain stock's going to do. So that's it, guys, and take care.